Good evening, everybody. This is Chrissy from Solstice ATR. You can find me on Twitter, the website, Instagram, as well as Discord. You can DM me on Discord. We use adaptive algorithm on this video just for educational purpose use. It allows us to recognize trends on short-term, long-term, and mid-term. Remember, we use this for illustration use only. We're not a broker-dealer. Past performance does not indicate future results, and you may not copy the information unless you ask permission, and you can check the disclosure on our website. Let's make this happen. Okay, first of all, are people looking for exiting signs in the stock market or just sounding the bell due to the last couple of days we had fear in the market? As a trader, what can we do? We have to have a mindset, keep an open eye on technicals while evaluating the short-term situation and the positions we hold, and at the same time, whether we enter a position or exit out of the market and reevaluate our thinking. So let's break this down one by one. I'll start with the three simple indicators, which is the S&P 500, the NASDAQ, and the Dow, which is the combination of the E-mini contracts. As you can see, we have a 3-year outlook. We have continued higher, and this week's candle was a little bit inside to lower on a linear regression up channel. We are holding the 18 simple moving average on the weekly. And I will go to the daily so we can see how it looks like, and we'll break down each instrument one by one. As we can see on the daily, we had a rounded top 2 days consolidation. We eventually, on Thursday, we fell a little bit, came back up, and on Thursday, we broke through that down channel. We are holding the 18 simple average. This is the breakout on the combination of the three. We have to keep an open mind on the 53,000 to hold up. If it doesn't, then we look for the backside of the 38, 50, the 61, and the 50 simple moving average on the daily. Let's go now, take a look at the small cap RTY by itself. As we can see, we have been range bound since March, April, May, and June. We created almost a triple top up here. It looks like an inverted W or an M, which I call similar to a crab pattern. And this monthly fib, we have lost it. And on today, we looked a little bit further down. The extension, the 161 is down here, and the 200 SMA. We have consolidation in this area. We're going to keep an eye on the canary in the coal mine, which is the small cap IWN or the IWN in the ETF fund. So you can keep an eye on it, or the big contract is RUT. Let's go now down to the Dow Jones Industrial Average, which is the 30 companies, or the DIA. The E-mini is the Dow YM. As we can see, we created 3 tops. I consider this is a top, this is a second, this is a third, and it's creating like a rounded top. If this is the small shoulder, this is the head of it. Do we hold the 18 in the breakdown of this channel and we go back up, or do we fall back below the 50 simple moving average, the 38, as well as the 50 Fibonacci and the 61.8, which be the line on the monthly Fibonacci from June? So keep an eye on the Dow if there is sector rotation. Second, let's go to the NASDAQ, the NQ. The NASDAQ represents, you can use the QQQ or the /NQ or the NDX. As we can see, we are in a linear regression up channel continuing higher. We have an advanced decline line where we broke out of this gap here. We had a rounded top or a double top here. We could not take on Thursday the prior day or clear the 14,880. We looked up in this candle, as you can see, the high was on it at 14,869.5. Could not get above the 80 and the 76. We fell back down. We are holding the 18 simple moving average. We are away from the 50. Keep an open mind in case we do turn back up, or do we continue on Monday on a gap down. This is the NASDAQ 100. Let's take a look at the SPY. And the SPY is actually the Fortune 500 companies. I put the ETF there. I have the weekly fib from last week, which we need to take out. I used the SPY just as a reference so everybody can see it. This was the prior breakout of this channel. We are holding the 18 simple moving average and the monthly from June high to low. We got to the extension of the 38. We touched almost the 50 and rejected on Thursday as well as Friday on a gap down and breaking through that minor small channel. We're holding the 18. Does this mean we hold the 427.50 or do we continue higher? It's what the market gives us, and don't be biased. We have the 50 simple moving average a little bit lower. Let's go back now to the ESE mini contract, which is the SPY. As you can see, we are in an uptrend. We broke the channel. We are holding the 18 simple moving average. From prior, we had this linear regression up channel that we looked below it. Every time we looked down, we touched the 50 simple moving average and got a reversal. Does this mean, are we going to come back and look at the 50? Keep an open mind on the gap here on the weekly chart, or you can look at it on a 4-hour and the prior gap from down here. We have created a POC, which is, price higher for volume profile above from today's price action and the day before. Let's go look at it on a 4-hour, 45-day range. As we can see, we have that double top. Then on Thursday, we fell down. In the overnight, we looked up, couldn't clear the 43.72 or the 43.74. We looked down and we fell below the 50 simple moving average, but we came down in a linear regression channel, and this was the prior channel that has been broken before. We tapped into it. We're holding the 116 SMA. The 43.05 is very important number for the monthly fib on the SPY to hold on. So let's go now. Take a look at CL, and I'll show it on a 4-hour. This is crude oil. As we can see, crude oil, that's Colgate, I'm sorry, /CL. And we can see that CL on the monthly 4-hour chart, we had an inverted M shape that we fell down in the last 3 days. Does this mean the 61.8 holds us and we hold the up channel, or do we end up further going back in the 68.50 range, or do we reverse above the 70 to continue back to the 74.15? Keep an eye on the crude oil because it has an effect on the Japanese dollar, the American dollar, and the VIX. Keep an eye on the dollar and the Australian. It will give you an idea where CL will be heading. Let's take a look at the GC/GC. This is gold. As we can see, gold has looked up and we eventually fell back down in range from the monthly fib. It looked into almost the 50 Fibonacci on the weekly. Then we fell back down to the 50. Does this mean we do hold or not? We'll go to the evaluate the daily. We'll do 3 month out or 6 month, and we'll evaluate it on the daily in relationship that the 50 SMA has been the brick wall and the 50 Fibonacci. If this holds the breakdown of this channel that we broke above, we looked down, we came back above it. If this means it's going to hold, it's going to bounce back up and continue. If it falls lower, we look for the backside of this channel here because we got these two in a linear regression channel, and we have the 18 simple and 116 holding us up. And we got the 50 and the 200 as resistance on the top. GC is undecided. I would like to see it a little bit lower before we can grab gold. Let's take a look at BTC, Bitcoin. We can see Bitcoin has been in a down slope, has not been able to take on the weekly, the 35,700 area. It's in a down channel. We have to keep an open mind on this linear regression down channel. Do we hold the triple bottom or 4 times that bottom to continue back, or does it look for the 23,000 area before we can get a nice rebound on BTC? Or you can look at GBTC. I'll put the GBTC, the ETF, so everyone can see. Oops, GBTC, my mistake, typo. Okay, as we can see that GBTC still in a decline unless it turns and clears the 18 simple moving average and breaks above the 2980 in order to continue back to the 50 simple moving average and 116. I am looking for the backside of this channel if it breaks through that linear regression, these two channels, and the midpoint of it. Let's take a look at Ethereum /ETH. We can see ETH is still in a down slope, has not been able to clear the 2160 or the 1985. This is a very important area, which is the 23% fib on the monthly chart. Does this mean it's going to create an H pattern bounce up, or do we break that H pattern to the backside of the open cone, which is around the 1480, 1500 for a nice rebound back higher in Ethereum? Let's take a look at now some of the ETFs. Then I'll go back to some equities. I'm going to first start with the bond sector, and I want to use the ZN, which is the pure contract for the 10-year yield interest rate bearing accounts, because this has an effect on real estate as well as interest rates if the Federal Reserve Board and the policies are going to be changing in, and they are still going to be pumping more money into the economy since the COVID economy has hit. And you can see in the last 3 days after the Tuesday dump, Wednesday was up, Thursday was up, and Friday we looked into the Thursday range to close at a prior high from Thursday and close a little bit above. If this is going to continue, we look for the backside of this linear regression up channel and the 200 SMA. If this falls, I would look for the 18 simple moving average. Let's take a look at the IEF, which is the short-term 7 to 10 year ETF iShare. And we can see it's in a similar situation. We can look at the 20-year note, the TLT. I started with the bond so everybody can see it. And the TLT is in the same situation, but there's a short, longer-term bond, and the yield is a little bit, trying to do a little bit of catch-up. Or you can take a look at the TNX, which is the inverse relationship to the interest rate bearing account in the bond market. We can see it. It's in a linear regression down channel. Does it hold the 200 SMA or the backside of the channel to continue back up, since interest rates have been depleted by the Federal Reserve Board as well as the global markets? Keep an eye on TNX. Let's take a look at some of the technology sectors, which are XLK. XLK has lost 2 days in a range. It's in an up linear regression channel, because if I connect this dot with this, we are still holding the 18 simple moving average. We'll put a linear regression channel right here, connect it with the lower control point, and we can see that the 18 and that channel has to hold in order to get the monthly Fibonacci at 148.73. If not, you look for the backside of the 23 and the 38 for a nice bounce in case the technology sector gets a little bit weaker and there's change in the sectors. Let's take a look at XLV in the healthcare sector. We are holding okay. On the weekly, we're holding the channel nice and clean in the 18 simple moving average unless we lose it. Let's take a look at XLF, which is in the financial banking sector. We can see that the financial sector has made an M shape. If this is the shoulder of it and it cannot hold this backside of this channel, we look for the backside of this channel to hold on the 116 to continue back up, or we look for the backside of the extension of the minus 23%. Let's take a look at XLE. And that's the volatility. Oops, where is it? XLE. That's the energy sector. As we can see, there has been a little bit rotation in the energy sector. We have lost some of its major grounds. We were in a linear regression up channel. Eventually, in the last week, week and a half, we tried to tap back into the prior breakdown of this channel, and the 50 and the 18 has been holding it down. This is what we call a death cross. We eventually lost the Tuesday, Wednesday, Thursday, Friday. We stayed below the 116 SMA. In order to turn, keep an eye on this consolidation before this break up here. This may act as support for a nice bounce, and the 200 SMA would be coming up to do some catch up on it. Let's take a look at JNK. Oops, JNK. And we can see that it's turned a little bit back down. It's the Bloomberg major indice cycle, and we can see that we lost the 18 simple moving average. We have to keep an eye on the 50 SMA and the 50 Fibonacci on JNK. Let's take a look at one more ETF, which is the IX, which is the VIX, which is the fear gauge. You can see every time we had a U-shape, spike down, U-shape, spike down, U-shape, spike down, U-shape, spike down, U-shape, spike down. Eventually, we are in a down channel. This is my concern. If I tap these three channels and I just zoom in here, this is very important. We are on the monthly fib between 21.82 and the low $14. If this is going to continue higher and we do end up clearing the $19 and the $20 and the 116 simple moving average, which is right here in the channel, I look for the 200 SMA. If we end up reversing and things are, the fear gauge is not going to spike up because people are starting to reevaluate their positioning in the earning reports in the market, we will spike back down. But I am watching the VIX with the dollar to keep an eye on the overall market. Once again, let me show you the dollar sign DXY. This is the American dollar next to the Aussie dollar and Japanese dollar, DXY. Okay, here we go. And we can see that the dollar has made a nice rounded bottom, and this is considered the cup, or this is a kind of wicked shoulder, and this is the second one here, or you can call this is one, this is two, and this is the third one. If the dollar going to continue higher, watch the Aussie, watch gold, Japanese dollar with the VIX in case they do continue the dollar with gold together, or we end up reversing back from the mean, back to the down from the monthly Fibonacci and the weekly high on the dollar sign. Let's take a look at AAPL, Apple. Apple looks like it had a reverse engulfing candle, came back to the monthly minus 161 or the 61 fib extension on the monthly. It has to hold this area to continue back up. If it falls back, you look for the 18 simple moving average, the 38.2, and eventually the monthly Fibonacci around here in order to get a nice bounce on Apple. Let's take a look at Boeing, BA. I did not re-anchor my fibs. You can see on the weekly that Boeing came back to the 200 SMA. This was the prior three consolidation, 1, 2, 3. Does this mean it's going to hold here on this M pattern, or does it continue up, or is continue in a lower version? Let's take a look at now Google L. Google L, we can see in the last couple of days, it has consolidated nicely up. Eventually on Thursday, lost, and it's got an engulfing candle. It looked a little bit low, then came back to close approximately in Thursday's range, close low. Keep an eye on the 18 and the breakout of this channel to see if Google holds this area. Let's take a look at NFLX, Netflix. Everybody uses Netflix at home, and watch a streamer. We can see it created a W. It pushed up. We got this small gap in this area. What I consider a professional gap. We have earning coming up as well on Netflix. Keep an eye on the earning on 720. We have this little professional gap. If we cannot hold the 116 simple moving average, the 200, and eventually the 50 Fibonacci in this channel should act as support before the earning. If earnings are great, it goes up. If not, watch your fingers or trade 2 standard deviations on the last 2 days of the candles if they are up or down in the direction of the earning report, the measured move. Let's take a look at Tesla. We can see that Tesla has been a little bit under pressure. Everybody was thinking that Tesla is supposed to go higher. We are in a linear regression channel. We broke this channel. We looked up of it, came back in, bounced off it, came back up to the upper range, came back in. The 200 SMA in this channel has to hold, and the 50 Fibonacci. If we end up losing that 620, I would look for the backside of the monthly fib, which is around 575, 570. If it ends up turning and things are great in the market, and this will act as support, the 200 SMA, the 50 in the channel, I would look for the backside of that channel to bounce back up to the 657. If the market is weak, I would look for the bottom side of the market. Let's do one more, LMT. Lockheed Martin, LMT. As we can see, Lockheed Martin is in a down slope. If this is going to turn in the 18 simple moving average and that channel is broken back to the upside, we'll look going higher. If it falls, we look for the 116, the 200 SMA, and the backside of the 38, 50, and the 61 to get a nice bound from this area. Let's go back to ES, and I want to show you on the monkey bars how we look like in relationship to what the close is for the coming week. We go from the daily, we go to style. We move here to the monkey bars instead of standard. We can see we have one day, 3 months daily. This is the monthly bars. What I want to do, go from daily. I want to go to 1 hour, 20 days. We can see that the consolidation, we broke up. We created a POC. We created a lower one. We have the same POC from the prior day. We are looking if the market cannot hold the 1418 and we end up losing the 4300. Be careful of it. This is the monthly Fibonacci. And if I zoom back down to the left, you can see that rally up, consolidate, fall back in, breakout, come back in. This is a very important area inside this consolidation because we had a lot of POCs. You can see they are in the same range. If we end up losing, since we lost that area and we cannot come back up to the 43, 47, 43, 56, I would look for the backside of this consolidation, and the backside, if we lose the 4300, I would look for the backside, the 4378, and eventually 4268. Last but not least, the 4237, and I'll move my fibs to the left. You can see with the consolidation, we grinded higher in the trend and we kept climbing. Then we consolidated for a couple of days. We fell back in that range and pulled back up. So my concern, if we hold this area, that would be a nice bounce on the Fortune 500 company. If you have any questions and you like our assistance, you can check us up on our website. I hope you enjoyed this video. If there's any questions you need, let us know. Take care. Enjoy the weekend, and I'll see you Monday sharp at 6:30. Take care.